Good morning, everyone.
Good morning.
Welcome to our panel discussion on the latest report that Magicbricks has published, which is the PropIndex JFM 2024 report. I'm Abhishek Bhadra, Head of Research at Magicbricks. A very warm welcome to all our esteemed panelists. We have the who's who of Bangalore real estate market today with us. We have Ashwinder R. Singh, CEO, Bhartiya City. Welcome, Ashwinder, to the webinar. We have Smarajit Mishra, Head of Marketing and Strategy, Brigade Residential. Welcome, Smarajit. We have Nitin Agarwal, Director, SNN Estates. Welcome, Nitin. And we have Kranti, Alladi, Head of Marketing at Concorde. So welcome, gentlemen, to the show. I'm going to start with, giving a brief presentation of the PropIndex report and some of the key findings that, we had outlined in this report, and then we can move ahead with our discussions on the key points. So PropIndex is a quarterly report that Magicbricks publishes using customer searches on the MB portal, primarily, which is the source of data for our demand analytics. We use our own algorithms to come up with how a certain piece of search has moved across cities, across certain demographics, and across various unit configurations and price segments. Right, on the supply side, we use more than 15 lakh listings, which is the maximum than any other property portal in India right now. So this is the latest report which we are going to be discussing, which is a culmination of all the findings across the last 3 months, which is January to March 2024. So I'll start with demand. The last 3 years post-COVID, which is 2021 till now, we are in a boom cycle, which is clearly evident by the unprecedented growth of real estate markets, prices, demand, transactions, and all of that is clearly visible in the data that Magicbricks has. So our customer searches has increased by more than 50 to 60% across every year on year over the last 3 years, right? And that seems to continue. Primarily, the three key triggers that have been defining this particular upsurge is that there was a lot of pent-up demand that we saw in COVID, right? People wanted to buy, but they were very skeptical about taking a decision and kind of delaying it at a further stage. So that demand is now coming into the picture. People have started buying. They started making a lot of transactions, making inquiries at the beginning of at the end of 2021, beginning of 22, and this is the third year, and we are still seeing a lot of this activity on the upward side. Favorable government policies. The key focus is on infrastructure development, housing for all. So government, policies have also aligned towards making real estate more robust and making it, accessible for all classes, not just for the luxury and the premium segment, but also for the affordable segment. So that is also driving demand, over the last couple of years. Rapid urbanization. We are seeing a lot of migration happening in the tier 1 cities from the tier 2 and tier 3 cities. Work from office has opened up. Work from home is now a thing of the past. And people are looking to buy properties which are near to their workplace so that they can walk to their office, and hence we are seeing a lot of development happening in key employment hubs in the city centers as well as the peripheral areas of the cities. So that is the overall demand trend that we are seeing. Even in the last quarter, which is January to March, we saw a 7% increase in demand. That is the consumer searches on the MB portal. So moving to the further breaking it down into size-wise trends, we saw a 3 BHK surge, increase in the demand for 3 BHKs and 3+ BHKs starting 2022, which went on for around 3 or 4 quarters. And what our search data clearly said was that people are looking for houses which are bigger, more spacious, more premium. But if I look at the last 3 months, we are seeing an upsurge in the 2 BHK demand as well, which was obviously there by around 2020-21, which kind of subdued in 2022, beginning of 2023. But that trend is also starting to creep up. We are seeing 2 BHK houses also being sold, being searched for. So that's one of the key trends. The western cities of India, which is Mumbai, Navi Mumbai, Pune, Thane, these are the key cities where we are seeing most of the demand for 2 BHKs. And Chennai and Bangalore. So Bangalore is kind of at par. I mean, 3 BHKs are at par with 2 BHKs, around 45% each. Supply side, with the increasing demand, with the transactions happening, overall supply, which is your available inventory, seems to be on a declining trend, which was kind of at equilibrium between 2020 and 21. But we are seeing that new launches have kind of dried up over the last 6 months. Available inventory is also repleting because people are making transactions. Developers, for some reason, I mean, what the data says is that they're a little wary of coming up with new launches across the segments. Obviously, we saw that luxury segment was one of the key areas where a lot of new launches happened. But overall, if you look at the available inventory total supply, that seems to be on a declining trend over the last couple of years. Pricing wise, of course, matching with the demand and the fact that demand has been surpassing supply for around 3 years now, prices seem to be soaring. We are looking at a 25-30% price increase on the MB portal, properties on the MB portal across the last 12 months. And even if I look at the last 3 years, on an average, we are looking at around 20-25% price increase per year. So clearly, we are in an unprecedented growth time where we see that as a boom cycle, and the COVID phase, the downward phase seems to be a thing of the past. So with that, I finished my presentation, and now I would like to open the forum for discussion. Right. So while our data clearly shows that we are obviously in a boom cycle, in a phase where there is unprecedented growth, people are looking for properties, they are searching for properties, they are selling properties. A lot of transactions seem to be happening on the front. With that, I would like to ask the following question, or I would like to discuss the point that we are 3 years into this boom. I mean, 2021 is when this started. We are in 2024. We are already 3 years into this residential boom. How long, do you see this boom lasting? Can we have Ashwinder on this, please?
Yeah, sure. Thank you. A very good and a tough question to start with. Abhishek, what it clearly looks like from my perspective is that it is for the first time that we have a good mix of investors and end users who are coming to the party and they are buying. So, if you look at Mumbai per se, the number of apartments which are empty still remains very high, and the number of apartments selling is also very high. So it is very clear that there is an investor component that has come into real estate, which was not there when the lull was there. Research also shows that generally a cycle, real estate is all about cycles, and the average cycle is about 10 years to 12 years. And some also say that the average cycle, certain places in the West, is also from 15 to 18 years, but I'll stick to 10 to 12 years. So if we have an homogeneous demand of real estate investors coming in, and this is an essential commodity, I treat real estate as an essential commodity, like salt and sugar and food and water. I hope, one day real estate comes under the essential commodity heading by the government also. Any end user, for him, it is an essential commodity. For, maybe certain segment, it might be taken for granted because you're born in a household where you have your own house and so on and so forth. But please ask people who are born in a rental house and they don't even have a single home, and their aspiration to buy a home is so big and passionate that it is unbelievable. So this first time buyer is a very big buyer that is going to continue to give us a good support to the demand. Then you have the people who upgrade and who want to move from a 2-bedroom to a 3-bedroom and a 3-bedroom to a 4-bedroom. And this first time buyer is now again coming back, and that is why I feel this 2-bedroom surge, very good data point that you shared, is again coming back in the last three months, and I hope it continues because it is important. And the other reason it is coming back, according to me, is because the overall capital value has gone up. So if in the last 2 years the real estate prices in Bangalore have gone up by 25 to 30%, that means something that was for 1 crore has become 1 crore 30 lakhs. And people who can't afford 1 crore 30 lakhs are moving from a 1,500 square feet apartment to a 1,000 square feet apartment and coming back to a 1 crore apartment. So it is all linked. So I feel maybe a couple of years, I don't think anything is going to happen. Maybe this euphoria is going to die down. However, this is a phenomena that you see in Australia. It's a phenomena you're seeing in Dubai. This is a phenomena. These 2-3 areas are also seeing the same phenomena. So I feel next 2-3 years will remain consistent. Incomes are going up, urbanization is there, and people just want to invest in real estate as an alternate asset class and move their profits from the capital markets and also put it in real estate just to balance their portfolio.
Great. So you made a very interesting point, Ashwinder, that there's a mix of investors and end users that we are seeing, on the transactions front. So with that, I would like, Smarajit to kind of just throw some light on what is a mix of investors. I mean, because if I look at the last cycle, which was 2004 to 2010, so there we saw, like a price bubble which kind of burst at the end, and then the real estate market kind of went on a downfall, which clearly happened because of over speculation on the part of investors, a lot of investor activity happening. I mean, that is something which seems to be different in this cycle. So what is your opinion of this on the transactions front? How many people are investing purely from an investor perspective versus end use perspective?
Thanks, Abhishek. One thing which is a leading indicator for this entire category is the investor versus the end user segment. And how do we read that? One is, of course, customers, when they're coming on board, we try to ask them that, is this for self-use or are you planning to invest in it? The second aspect is also in terms of your home loan percentages. So that is something also which we keep actively tracking. And of course, while it varies at a project to project level, there are certain projects when you're developing a market and when you enter into an affordable segment, it attracts a huge chunk of investors. We have done that in maybe some pockets of North Bangalore, say in KIDB, where all developers have started coming together, and it's largely an investor-driven segment. At the same time, pockets like Whitefield, which were traditionally for end use, because people would maybe look at, as the rentals would go up, they would look at switching and moving to a shift of owning an apartment so that they could kind of actually create an asset while it's functional also. In those pockets also, off late, we have been seeing a declining trend in the home loan penetration. So what it effectively also shows is that there is a chunk of investors which have started getting attracted to these projects. And also, like Ashwinder spoke about growth of 24-25% in the last couple of years. And this is something which has been it's been a sustained growth since the last few quarters. Every quarter, it's a pleasant surprise that now the index has moved little forward. And I personally feel that this is still, the run is going to continue for a few more years, because the markets, if you look at traditionally South Indian markets, have been underpriced for too long. So when, say, I shifted from Bombay maybe some 9-10 years back, it was a bit of a shock to see the kind of prices by the tier 1 developers, and it's I think it's now time for the South Indian markets to catch up, which is what we are seeing is happening, because cost of construction at a core is kind of similar. Land prices is also a factor, but I still feel that investors will continue to see great returns, and hence the percentage, like if it was equitable at some point of time, I would say it's tad higher on the investor aspect in the last few quarters.
Thanks, Smarajit, for that. Very insightful. On that front, we are also seeing that, as Ashwinder mentioned, that 2 BHKs seem to be on the rise. I mean, we are seeing that with our data and also on the transactions front. So, is it purely because of the spillover effect wherein people are now not able to afford 3 BHKs? Or is it because 2 BHKs have a better ROI from an investor perspective? So what is triggering the 2 BHK demand? And if I would like to ask this question to Kranti. I mean, what is triggering this sudden splurge of demand in the 2 BHK segment?
Thank you, Abhishek, and hi to the whole panel. Good to see you all again. The 2 BHK market, actually, it is propelled by both factors, what you said. One is like Smarajit and Ashwinder were talking about, that there is an investor market. So what I call them as retail investors. Typically, a property seeker previously would own a property, especially in urban markets like growing markets like Bangalore, would own a property, would upgrade his property. These were upgraders. But now we have second home buyers or second property seekers who want to have passive income, who want to go up with the security, who want to be part of that asset growth from real estate. So these retail investors are able to add to that 2 BHK growth because the yield factor is close to today. City like Bangalore, 5 years back, it was around 2.5-3%. We're looking at 5 to 6%, in some cases 6.5%.
Is it?
Rental yield is there. So the yield factor for a 2 BHK is higher. So they add to the 2 BHKs. And second, yes, what we have seen, price has grown year on year from the last 3 years. We are seeing a price rise of above 35% average across metros, and add to that your your brand pricing or brand equity that one is planning to charge. This is actually helping the consumer, because what has happened post COVID, the growth that we have seen, is real estate as an asset class has come into the forefront. Okay, and the growth of the Indian markets, the Indian growth story being positive, you have many players coming into the market. People want to have that comfort. People are willing to take that additional risk. Of course, the interest rates, they propel to the growth. But that intent to buy from a home buyer is come into place. So the first home buyers are an active players also, which I believe contribute to close to 60% of today's 2 BHK market.
Can I add something here, Abhishek?
Yeah, sure.
So while I know the question was that 2 BHKs seem to be back in vogue, but if we look at, say, the trends also, I still feel 3 BHKs still have some runway, because one is the gestation period in this sector is quite long. Today, if there is a demand, I'm not nimble and agile enough to immediately start churning out 2 BHKs. The entire design and approval process is maybe 18 to 24 months long. And if we still look at maybe a Bombay versus a Bangalore, a Bombay trend shows maybe, as per your own report, maybe a quarter percentage of the people are
That's
only
right.
looking for 3 BHKs, which is as high as 46% in Bangalore.
Yeah.
In Hyderabad, 64% of people are still looking for 3 BHKs.
Right.
Because if you were to also look at maybe the profile of people, salaried class, working from home and all, there is still a very, I would say, strong demand for 3 BHKs, which also comes back to our initial point about the market being underpriced, and still there is some absorption which it can take. Once maybe it is priced out, is where you will start seeing more of 2 BHKs and all, which I still feel maybe at least 2 to 3 years away if you were to see close to a Bombay kind of a trend at this point of time.
Sure. So, Nitin, I would like to hear your opinion on this. In the sense that from a supply perspective or new project launches perspective, how does a developer kind of see the market today and figure out that what kind of unit configurations would work the best, going forward? So are you looking at a mix of 3 and 2 BHKs, or is it more favored towards what configuration? If you can just throw some light around that.
we develop a project. To launch a project, it generally takes around 24 months to 30 months. So we have to plan what will be the market after 24 to 30 months. So like we have 4 projects in the planning phase. So generally we take a mixed opinion rather than going for trends today. We try to figure out what would be the price points existing after 3 years. So it's not the sizes which determine the sales for us. We work out on the price brackets, and in those price brackets, what are the sizes we can provide. So generally, I've seen customers come with a budget in mind rather than I want a 2-bedroom or a 3-bedroom, and whatever fits in the budget, they go for it. This time, there's a little influx where between before 2016 and today's market, what I've seen is a huge demand coming in from the retail investors rather than the large institution investors. So we had guys who are buying multiple units. So they are somewhere missing out in the market. I have not seen people coming with multiple units, 20 units, 25 units. Those guys have all gone into lands. So they've started purchasing lands and giving us for joint ventures. But huge chunk of first-time retail investors, I would call them the first-time retail investors, where there's a FOMO in the market. They don't want to miss out on the opportunity or the growth story of real estate. And that is why you see the plotted doing very well. Residential in North Bangalore, East Bangalore doing very well, especially in the North Bangalore. It's become more of an investor-driven market as compared to the East and the South. So while planning a project, I generally take a mixed opinion where we try to have an equal percentages of all the sizes. So we don't decide it based on today's needs, but what we foresee in the future is how we go about doing it.
Got it. And also, since you spoke about the localities where most of the demand is, we are seeing in Bangalore, what we are seeing on Magicbricks portal is that Sarjapur Road, Electronic City, and Whitefield. These are the 3 most searched localities in terms of real estate housing. So, does it also, how does it match with what's happening at the ground level on the transactions front?
Absolutely. Actually, you're absolutely right. See, if you just forget the North, which has a lot of projects lined, and seems to be a lot of supply which is coming up with availability of land. But down the South, Sarjapur side, there's a scarcity of land. You don't get lands. The number of projects which are coming are less. So here the market trends behave a little differently. Where, for example, in South Bangalore, if you want a 3-bedroom, it's very difficult to get. 2 bedrooms are still available, but 3 bedrooms are getting sold. It's just that you don't have 3 bedrooms for sales to happen. Among 4, me and my partner put together among almost a stock of 2,500 flats in South Bangalore, you see that we are almost sold out on 3 bedrooms. So what we can sell is just 2 bedrooms. So if we have that to sell, we have to just market those and convince customers to take the 2 bedrooms. So absolutely, there's a big variation between the North and the South.
Got it. And Ashwinder, I would like to hear your opinion on this. So which are the localities? What are the upcoming localities? I mean, we have been hearing Whitefield and, Electronic City being in demand for quite some time now. What are some of the upcoming localities in Bangalore where we can see demand shaping up?
See, it's like this, that 50% of demand in Bangalore comes from South and East. You talk about Marathalli, you talk about Whitefield, you talk about Sarjapur, that is the belt which gives you 50% of demand. 25 to 28% demand is now coming from North Bangalore. And actually, West Bangalore is around 4 to 5%. The only area where there is very poor demand in Bangalore is the western part of Bangalore. I don't know how long will it remain like this, but what has happened is North Bangalore is 28 to 30% of the demand, and that is why your searches are also showing a very similar trend, and that is where most of the employment is. North Bangalore is the emerging corridor, and I work in North Bangalore, so I have we keep on looking at this very keenly, and that is why I feel that North Bangalore, I think the share might go up over a period of time because the availability of land is also kind of structured in this way that North Bangalore has to go up, because you might see newer launches coming on this side of the city. So that's the way I think we need to look at it. Another point is that the capital values are also giving, if you have more investors, people are seeing more growth in North Bangalore because the capital value in North Bangalore was lower than South Bangalore. So for an investor, he also looks at that how much he needs to invest. So he was getting a better opportunity in North Bangalore. Most of the plotteds are coming on the North Bangalore side. I don't know how good or bad they are as an investment opportunity. They are good for the developer for sure. I don't know how well good they are for the end user and how many people have gained returns from plotted. But plotted is a fundraising strategy for a developer, and they keep on doing it. It's an easier way to do it. You don't have to use your mind. You just spend 1 crore on an acre and you develop it and you sell it. And people, for their love for land, they go ahead and buy it. What will happen to that land and how will they get the resale? I have never been able to understand. So, but land and plotted is also coming only on the northern side. But the ROI has been higher in north vis-a-vis south. So it also shows that investors are more on the north side and end users are more on the Sarjapur, Electronic City, Whitefield side. That's my assessment. There is no particular data that I have to back it up.
Sure. Understood. I'll come back to Kranti. You had mentioned that the rental yields have gone up to 5.5% to 6% in one of the previous points. So I'm intrigued by that because 6% rental yield on residential segment seems to be very high. I mean, we have been seeing that maximum is 3 to 4%. So any specific reasons why we are seeing a 6% rental yield, and what is driving this particular segment of investment?
Abhishek, this phenomena is seen very well in the east and southeast part of Bangalore, which is of high demand in terms of residential spaces. And it has been beyond the reach. The prices and the ticket size that the developer is offering in these localities is beyond the reach of a first home buyer. And that is the reason you see a surge in these rental prices. 3-bedroom is anywhere between 40 to 70,000 rupees in these marketplaces. And even in the southeast part of Bangalore, which is typically the electronic city, which was catering to a service class job profile, has also seen a surge where a 3-bedroom is costing you anywhere between 40 to 45,000 rupees as a rental yield. And where the prices, when the buy-in price was reasonable in these marketplaces. So these are the two factors that has seen these yields going up, which is actually good because this is helping us to better understand the demand in these micro markets and assess what is the kind of demand. Just adding to what Ashwinder was talking about is, yes, what we have seen if we can learn anything from the financial markets, there is always scope for speculation, and that is what is happening in north part of Bangalore. That people are speculating the growth, the ROI is all on a speculation basis. But when you actually see brick and mortar to be built, these traditional east and southeast, east and south markets have always been strong for a city like Bangalore, and they're going to continue doing that because that is where the jobs are. Yes, new KIDB is growing, infrastructure and connectivity is yet to happen, so it's going to take some time. You're seeing a 3 to 5 year horizon where that micro market, the social infrastructure comes into play. If Tanisandra, Henno Road or the new airport road is to be considered, it is restricted. The brick and mortar for North Bangalore is restricted to those locations only. And I see a few developers doing concept selling in the suburban north of Bangalore. I don't know how long it will stand. So these are markets. And west, if you see west part of Bangalore, the yields have held. You still are going good. I strongly, just to what Ashwinder was talking about, West gives us only 5 to 7% of overall market share in terms of sales. But somewhere I strongly believe that we as developers have missed a trick in giving a product variant for West. We try to use the same scale for a growth market to a more conservative market. West is a conservative market. So the product mix of most of the developers has been the reason for the slow growth rate in the West.
Only one point I'll add, because Kranti made an important point. The rental yields in Bhartiya city currently range between 6 to 8%, Abhishek.
Oh, is it?
Yes, a 3-bedroom in Leela Residences in Bhartiya city goes at a rent of around between 3 to 4 lakhs. My capital values are trading at 11,000 per square feet in Bhartiya city. If you have to buy a home on a resale, my new sale is also around the same rate now. And a studio apartment which somebody bought for 35 lakhs a few years back is going at a rent of 22,000 rupees. I'm not even going to bigger apartments.
Well, that's quite intriguing because 8% unheard of in residential.
Yeah, it is completely unheard of. It is matching commercial real estate yields. So if you give a development which is, so it is not everywhere, but certain places, the rental yields have gone up, and it is for the first time that ADIA has invested 2,000 crores in a prestige project. It is for the first time a sovereign fund or an institutional investor is investing in a residential project. So this is one very good development that has happened, which has never happened ever in the history of real estate, at least in India, because residential projects are not income yielding assets in India. They are not income yielding assets. And if you have ADIA investing, which means that you will get more foreign and institutional money coming in, and they are just right now playing on the expectation that capital values will go up and the launches will happen at a higher price. Because if they are investing in a new project, that means they are expecting launches to go on a higher price, and they make money on capital appreciation. So they are assuming that capital will appreciate at around 10%. Because 25% capital increase in 2 years is mind-boggling. It's not a small amount.
Yeah, absolutely. So on that point, I would also like to say that there is a certain data point that we capture, which is the interest of NRIs. I mean, how are NRIs searching for properties on the MB portal? There also we are seeing a 15 to 20% increase in the last 1 year, especially for properties in southern India and western India. I mean, obviously Bangalore has been one of the main areas where we have seen a lot of investments from NRI, people who are looking for properties. Mumbai, Bangalore. So how do you see do you see a surge in the transactions from NRIs in your properties? And I want to ask this to Smarajit. Do you see an increased interest from NRIs for Brigade properties?
So NRIs have always been a steady contributor to our business. So anywhere to the tune of maybe 10 to 15% of our bookings typically come in from the NRI segment. Now, if I were to actually just go back to the same data point that you quoted, that while the demand has gone up, maybe in terms of searches by 10, 15% or maybe 15 to 20%, I think as a percentage, if you look at maybe the domestic market, the searches there might be far higher in terms of the percentage growth and all. Because what effectively we are discussing here is, as and when people are realizing that there are these good investment options available for me locally, as a percentage, I would say maybe NRIs have it's remained flatline, but the total pie is growing bigger. And in some isolated maybe quarters, it might have dipped also slightly, but just because the domestic absorption is so strong. So it might be a similar trend maybe across developers also. But that is something that we have seen, that maybe as we grow bigger year on year, NRI as a percentage has not necessarily grown, but just because we are growing, we are doing more, launching more projects, selling more, they are also growing as a part of that whole piece. And I also wanted to just touch upon one opinion on the earlier question in terms of the infrastructure development and where the pockets are lying. I also feel it's a direct function of like Kranti mentioned, where the jobs are. Also, in terms of the infrastructure development, because now with the blue line getting connected and all, a lot of the development pockets will come towards the northern part of the city, just because we have seen a clear shift. People working in Whitefield are willing to maybe commute from KIDB. There will be, once the entire blue line comes up, it becomes that much more connected. And like Mr. Nitin also mentioned earlier, there's not enough supply in these markets today for new projects getting launched and all. I think whatever launches we have seen in the last year, while East was still leading the pack, it might be a lot of those acquisitions would have happened way back. So as on today, there's not too many land parcel available itself to come up with something, a large township, good premium development. There's very little landscape available to build that also.
Correct. Very interesting. You mentioned that there is obviously no land available. So if I talk of new launches, new projects coming up, that obviously, so total supply is a direct function of what kind of new launches are we seeing from the developers. So does that mean that over the next, say, a year or 1.5 years, we are going to see less launches happening in Bangalore? Or I mean, what is the focus area? Is it more towards clearing off the inventory, ready to move inventory, or launching new projects in these hotspots in Bangalore?
See, ready to move inventory, I can maybe go out on a limb and mention that it must be at an all-time low across developers. There's very little ready to move. At Brigade, we hardly have any left across the entire portfolio, because the absorption has been extremely strong for products which are ready. People wanted to buy in something which they could move in within the same year itself. And another yardstick here would be, it's not necessarily that the launches have come down, but the sales life cycle has actually shortened like anything. So we are selling out much more at a much faster pace of time, which is what is leading to the lowest, I would say, inventory overhang that we have seen in our maybe career so far. And Bangalore that way is at the forefront, because I think it is maybe a good problem to have, but maybe not, that we are seeing a quarter overhang of maybe 2 to 3 quarters, which effectively means that if there is no launch, there's no fresh supply, all of us will be without a job after 3 quarters. So that's what it is. But the good part is also there are a lot of efforts being made. I think there are a lot of approvals coming in, launches are coming in quite steadily, and I don't see launches will necessarily come down. Everyone is looking at aggressively scaling up and all, and they will continue to do well with the shortening of the, like typically a project which takes maybe earlier 3 years to sell out, now it's selling out in less than a year now. So that is where you see the growth across developers coming from.
Got it. Great. So the other point which I want to discuss here is, we saw last week that the Monetary Policy Committee meeting, the interest rates have been they have been stable for quite some time now, and even in that meeting it was declared that it's going to be the same over the next few months. So how do you think interest rates, if they are stable and they don't increase or for that matter, as expected by many people, it was supposed to decrease but it's not, so how is that going to increase or impact demand for housing in the coming future? Maybe if Ashwinder, you can start with that.
See, Abhishek, in the long run, I've run the mortgage business for Bajaj Housing Finance for 4 odd years. I've run their retail. I've actually funded Concorde. I don't know, Kranti.
I know.
I've funded them. So, I've given them developer finance. I was on the wholesale side, retail side. What I feel is a little bit of change on real estate really doesn't matter. A real demand. So that is why, as you were saying rightly, that there was an expectation that the interest rates will soften, and they haven't softened, but that has not impacted the demand. So it's not going to be too volatile over a period of time. The economy is doing well, the demand is there, the GDP growth is pretty good. It is for the first time ever that the mortgage rate in the US is 7% and we are at 8.5%.
Yeah.
And the difference is 1.5%, which used to be, we used to be at 8.5%, and they used to be at 1.5-2%. But the beauty is, despite the mortgage rate going to 7% in the US, and the rate of interest increasing by 3 to 4 times, the capital values have not gone down, the demand has not gone down. So somewhere it is coming out that if somebody who has to buy a home has to buy a home, and the rate of interest really does not determine whether they will decide to buy a home or not. What the rate of interest will determine is they might delay the process of buying a home to increase their down payment to control their EMIs. And with EMIs now going up to 30 years, 35 years, and so much of structuring happening on EMIs, where for the first 4 years you are only paying the pre-EMI or the interest, and after that your main EMI starts. And by that time you start expecting that your income levels will go up. So there is so much of structuring that is happening. There is so much of innovation happening on the housing finance side, that they also have to be in the business and keep on growing. So they will keep on bringing in innovative stuff, dealing with developers, coming out with innovative schemes, customized schemes, so that, the customer EMI burden does not increase beyond a point in time. And as I said, it is an essential commodity. So somebody who needs to buy a home will buy a home. The only aspect is, like, Smarajit said, that, large developers, Brigade, Prestige, Shobha, PLF, even now we have a couple of launches. Bhartiya, we've kind of launched 3 million in the last 1 year, 6 months. And we have a pipeline of 8 to 10 million that is going to come in the next 12 months. The issue is going to be with developers if they are not ready with the land to take care of the opportunity which is there. Because see, this manufacture, it is not a manufacturing business. It is a business where you need land, and then you need to launch, and then you need to have all the approvals, and then there needs to be ease of doing business, and you need to be very fast in doing the launch because you want to take advantage of this time. And that is where a lot of people then feel that we are not able to launch and take advantage of the opportunity. We have also seen in Gurgaon that DLF has been selling very well, but beyond a point, because of the rising prices, there has been a certain slowdown in the sales vis-a-vis the projections that they had. So it is a mix and match. But yes, I agree with Smarajit that you need to be prepared for such opportunities. Because if you are not prepared, and Nitin was also talking about it, that there is a time period that is required to launch a project. Starting from identifying, doing a JDA, getting approvals in place, and then launching it. And if that time period gets consumed, and by the time some of the players are launching, say in 25, 26, with full gusto, and the demand has kind of stabilized or, become a little, has tapered down, then it will have an impact. And that is what cycles are all about in real estate. Because by the time some of the people start getting into the launch mode and the supply increases, the demand is not able to catch up, and that is where the cycle kind of starts ending. So it is a very interesting thing. But yes, I don't think interest rates, especially in India, we need to worry about them.
Got it.
Small point.
Yeah.
See, I actually interest rate, what Mr. Ashwinder told is right. There's a small, I would say, a tipping point which I'm seeing in Bangalore real estate, which is going to come up, is the government has recently published a notification on premium FSI. So still the rules have to be framed and rules have to come out. So once premium FSI comes, there'll be a shift where supply suddenly will increase. So at least on the papers, they tell that there is you can load premium FSI. Earlier it was 60%, but people are predicting up to 100%. So that means the available land is doubling suddenly. And the process is very simple as compared to TDR, where we need not buy, validate the legal papers. It's very simple. Just pay the BBMP and get it. So with that coming in, there'll be a definite change in the Bangalore market, which we'll see. Definitely impact North Bangalore a little more, because North already has lands, supply, and everyone, the prices at which the FSI is being rolled out is very, very lucrative to all the builders. So there would be a tipping point where we would see that suddenly the supply would increase. Once the policy is cleared, give 4 months, and then you would see the supply on all projects increasing, choices increasing. And maybe we don't see the growth rate which we're seeing now after 6-7 months. There will be a softening of rates or a little correction in market.
No, it's a very good point. I just want to make one point on the premium FSI that, it
Yeah.
is a bittersweet thing because of premium FSI, some of the launches that are to happen are going to get delayed by 5 to 6 months because now everybody is going to wait and get the premium FSI
Yeah.
because all developers think alike. There is no rocket science. This is the easiest business to be in. You do other businesses in banking and financial services. That is why, the least amount of talent comes to real estate. And the real CEO is the promoter. And they are all very, very smart and good and understand this business very well. So what is going to happen is very good point. If your launch, which was going to happen, say 3 months, after 3 months, gets delayed by another 6 months, and there is a little bit shift in the dynamics, and because of the premium FSI, whatever you are paying, you also increase the launch price, and you say, okay, I was going to launch at 10,000, now I'm going to launch at 12,000, and I will take advantage of the premium FSI and I will try and cover and ensure my profit margins. So anything can happen. So that's a very good point, actually.
Great. I
Just to
think
add, sorry, just to add to that premium FSI story, like Ashwinder said, it's a bittersweet thing. But I'm trying to put my neck out that any developer who is holding their launches or in their for just that maximizing their FSI, which already we are all in that rat race of maximizing our FARs around, is they might miss out on the initial bull run that we are experiencing as we speak. Eventually, it will taper out, and I see that people might fall for it initially, but over a period of, let's say, next 2 years, okay, this will be just another feature that people might not opt for until it's a premium location where there is a huge demand in a certain prime property place. Yes, there will be an initial seek and run for it, but we at Concorde would definitely be. Of course, there are a couple of projects we are also waiting for those premium website to come to, but that's just more not for delaying. If a developer is delaying, then he's missed the bus.
No, I would put it this way. Actually, what will happen is projects will start coming out in phases where people will not miss the opportunity of launching, but they will educate their customers, hey, there's another building coming up or another phase coming up, wherein if we get the premium FSI, we'll load it and we will make another phase of it. And that is what will start as a trend in the market.
But can you do that?
Yes, absolutely, sir. Absolutely, you can do it. But you have to take two precautions while doing it. Is A, you should declare it in RERA that, hey, I'm coming up with a new project. And you have to submit an affidavit in RERA stating that when I get premium FSI, I'm building so many square feet, equivalent to so many buildings and so many floors. And if I get premium FSI, I intend, if I get it, I intend to do it X number of floors and X area would be there. A affidavit has to be submitted to RERA, and a similar affidavit have to be signed by each and every customer who's booking your plot, and then you can do it phase wise. It's allowed in RERA, and a lot of builders have been doing it across India. That is the first thing. Second, with Kranti, I don't see anyone, the rates at which FSI is being, premium FSI is being proposed in the market vis-a-vis the kind of land. Everyone is in the business and everyone knows how difficult it's becoming to get clear-cut lands. Clear-cut lands have become a luxury now in Bangalore. So I see that premium FSI will definitely rock. Everyone would like, it's a low-hanging fruit. So I need not do the legal research. It's just paying a little extra amount and getting it. I do see it as a game changer where all of us, including us, if there's premium FSI and scope of loading it, surely we'll try to maximum as much as possible. Very tough to get land. So that's the only way we can increase our existing supply.
Great. Thank you very much for this lovely conversation. I would like to hear the closing remarks from all of you in terms of what's going to happen to the market in the short to medium term. I would like to go around the table. Smarajit, can you have any closing remarks on the market?
I feel, this is the purple patch that this sector, it's been a long time coming. And it's about maybe doubling down, focusing on basics, getting your products out quickly in a very well-designed manner, and try to meet the current demand which is out there, because it's actually about just sticking to basics and trying to do justice to the customer, do right to the organization, and the growth will come naturally. So that's what I would say my assessment of the overall situation currently is.
Great. Ashwinder?
No, I agree. It's we are going through a great time, but most of the mistakes are done when you're doing well. So I think it is very important to keep your feet on the ground, be very careful, focus on data, focus on insights. Like the thing that you're doing, Abhishek, is very important. And I think a very nice panel, and some of the points that Nitin, Smarajit, and Kranti have said are very eye-opening and great learning for me. Actually, I'm going to speak to Nitin after this call and understand premium better. So very good initiative, Abhishek. I must congratulate you for this.
Thanks, Ashwinder. I would like to hear Nitin's closing remarks.
See, I would say the market is very exciting. We are on a purple patch of the market. The market will be the same for a couple more years, at least a year or two. After a year or two, I would not see there'll be a price correction as such. But yes, there in a Bangalore kind of market, there could be an oversupply. Because of a lot of retail investors trying to sell the product, and B, due to change of government policies like the premium FSI and everything. So it's a watchful scenario. We should have customer at a prima focus rather than launching projects. Why are we doing this project? Why will someone buy here? Rather than just launching a product, I put myself first. Hey, if I'm working here, will I buy this project? If I'm able to answer those questions is when I should go about launching it. So rather than just thinking about launching a product, we should first answer this question: why are we launching this product? Is this market correct? Because see, there'll be good times and bad times both happening. So a good time, everything sells, but you should also be prepared for times when you might not be able to sell. So that's the most fundamental thing. As for an investor, I would encourage him that this is the right market to be in. Better to buy products today. Just do a fundamental search of the locality and the kind of opportunities available in the locality purely from the job perspective. If you see job perspective coming up in locality, please go ahead, invest in those products. And market, at least for the next 2 years, according to me, is very good.
Sure. Kranti, your closing remarks?
I strongly believe this trend is going to continue for a certain period in time. I do not want to call the number of how long it will be, but yes, the responsibility is on the developers. Of course, the micro market also plays an important role. We are all talking very Bangalore centric. Yes, understand Bangalore. So as long as the India growth story continues, we as real estate players can benefit out of the India growth story. It depends on us. Like Nitin had said, keeping the consumer first is very, very important. Not about what I'm going to, what I think is right, or how am I going to maximize this particular piece of land. Approach might not help too many developers. And also be wary of the speculation market, that how much are you exposed, or how much are you exposed to that speculation real estate market that is now existing. It's a reality, right? How much are you exposed to that is going to determine. But yes, I see a very strong reason why somebody should hold and invest in real estate, irrespective of what your expectations and returns are, because real estate is here to stay for a very long time.
Great. Thank you, gentlemen. That brings us to the end of the panel discussion. I would like to thank all of you for sharing your valuable insights. I think we are definitely in this bull run, and obviously very exciting times for the entire real estate landscape. And that's it. Thank you, and thank you for your time. Have a good day.